Can you see this?
Yes, it looks good. Cool.
Hey, Margette, can you hear me?
Hey, Corbin, we can hear you.
Okay, thanks. I'm going to mute now.
I'm going to rename you. Who you are.
Got a few more people coming in.
Go ahead and get started. We can record this so that people that
Yeah, we got it.
that want, want a copy of the recording, or we can send it out to them. We try to let everybody put even more notices this year. Then
Margette, we're having trouble hearing you.
Yeah.
So
It's not as with us. Do you want to try exiting and re-entering? See if that works.
Alicia, why don't you just stop recording for right now?
Yep.
It may also be how. All right, ready to go.
Oh boy, God help my staff for the rest of the day if I hadn't fixed that. Okay, like Alicia said, if you have questions, you can put them in the chat box, but we're also going to leave room for questions, but we are recording this. So we're trying to do everything we can. And most all of you are going to interface with your accountant. They're going to be the one that, signs off on your application. And so if they're in the area, they are very familiar with the enterprise owner. They know they can reach out to us at any time. And one of the reasons that we really try to reach out to everybody is because this is an ongoing program. This is one of the incentive programs that is from the state of Virginia, but we're the administrator for, and it is something that is ongoing. So it's not a one-hit wonder. So if you're doing, improvements or building something or adding jobs or any of that, all of this, what this is about is that at the end of the day, you don't need to remember these 101 slides, but you do need to remember our office and calling us or emailing or texting or whatever to let us know when you're thinking of doing something. And then we will go to work figuring out what are the incentives that you're eligible for and presenting those to you to take advantage of if you choose to. So the Enterprise Zone program this is a how to apply workshop. We're going to give you a few updates. Like I said, this is in a very, very long presentation. I'm going to try to make it as entertaining as possible. But I'm going to hit the high points on any of this. And we have Corbin is here up in the corner. She works with Brown Edwards. I think somebody from Davidson, Doyle and Hilton. Jessica's on the line as well. These folks do applications for businesses in the city all the time. So sometimes I lean on them to answer a question as well, because they're on the front line, you know, attesting to the applications. Some of the applications need an attestation, some of them don't, depending on like the job creation grant, depending on how many jobs you have, that kind of thing. But we'll hit the high points on that. And this is what the agenda is going to look like. We've broken it down into the 2 grants, and then we'll just walk you through it. Okay. All right. So the one thing we did want to talk about is just, first of all, to congratulate all the businesses in the city that have made it thus far through a pandemic, and to talk about the CARES Business Recovery Program that our office and the Economic Development Authority, you know, with the support of City Council, they never blinked an eye. And when those funds became available to them, CARES funds from the state, they immediately took a huge portion of that and allocated that to the EDA to be used for business grants, trying to get that to the people that were most affected by CARES. But by the time it was all said and done, you know, if you could really show a loss and, you know, weren't a huge, you know, national company, you know, some of this money was probably available. And what I'll say about this is the same thing that has gone on with the enterprise, and that is each one of my staff made phone calls. We went down through an entire list working with the Commissioner of Revenue's office to find every single business that we had in the city. We reached out to them with a phone call. We reached out to them with numerous emails, and we reached out to them with snail mail. So we ended up doing 337 of these grants for a total of you know, over $3 million, almost $3.2 million. And all that was accomplished between like June and, you know, October. So, you know, I can't say enough about our staff, but I also, you know, the businesses, I know this was all incredibly overwhelming between PPP and the EIDL and all of the things that were coming down. And a lot of our smaller businesses are just not equipped to know, you know, if I do this, what are the liabilities on the other side? So there are lots of partners out there. I know the CPA firms have been incredibly busy trying to navigate with their customers through all of this and trying to put people in a place where they do understand what they are signing up for. But anyway, that we were just, we were delighted to be able to do that. And we really appreciate the confidence that City Council had in us to move those funds out. So now we just have to audit all those funds. Thank you so much. And that's going to be just a extravaganza. Local programs and incentives. This is not an exhaustive list of the programs we have, but all I'll say to you at the end of the day, we have a real estate rehab program that is for buildings that are over 20, commercial and industrial buildings that are over 25 years old. And that is administered by the city assessor's office. So before you do a project, if you're going to do some major work to your facility, you want to contact the city assessor's office. They come out, look at it, and what can happen is that if the work you're doing is deemed to improve the property by 60%, then you would get a 10-year abatement of whatever the improved assessment was over a 10-year period. So I don't want you to have to remember all that. All I want you to do is to know that you can call any of us. So Alicia is here on the call, and you can see her. Anna's on the call. You can't see her, but she's here. So really a member of our staff has all of our, you know, what we consider our major businesses. Yeah, everybody has an assignment of, building relationships with our major businesses and making sure that they know to call us. They don't have to ferret through all of this. They can just call us and we will let them know what it is that they're eligible for, right? Everything you tell us is confidential, and it's totally up to you. You can take advantage of the programs or not. The real estate rehab is one of the programs, though, that you have to do it on the front end. The enterprise zone you all do on the back end, and a lot of our other programs you do on the back end. But this program, you do need to let them know up front. And so, I would just say, make sure you contact us, and hopefully we'll be in contact with you enough that when you're thinking of something, you'll share it with us, and we'll already go to work to let you know the things that you could be eligible for. So we've got a local redevelopment program, and we've really tried to, and that is something where we're allocated funds from council once a year. So we don't know, sometimes whether we're going to get it or not. So we do it on a year by year basis. And it is a program that it is really meant for some of our smaller businesses that, can't qualify because they're not doing $100,000 worth of work perhaps to their property. But we cross the board with the money we have. We prorate it across the board. And what we do is we let you know by pulling the building permits, the finalized building permits. We do it at the end of February. We let you know that you're eligible to apply. So we will reach out to you with a letter as well as email and call and all of that to say you're eligible. The applications are due May 1st. We make it as easy as possible. We've already got your building permit, and you fill out the application, and then we look at how many applications we have, and then we prorate, we just go across the board with that. Then there's a Economic Development Authority revolving loan fund. That is was $1 million fund that another commercial entity paid the EDA back for a loan back when the recession happened in 2007. And we created this loan fund to try to help customers that, within a day's time, they could have gotten a loan all day long from a commercial bank. And based on what happened back then, all of a sudden they couldn't. So it's really a bridge, a lot of times used as gap financing along with a commercial lender. And it's an application process. And we actually have a revolving loan committee that's made up of bankers and investment folks and small businesses. And they sit and look at the loan, but it's a program out there. It's up to $250,000. We also have programs. The EDA has a job creation grant and a capital investment grant. And those are not on here, but those are a very valuable part of what we do. But all of these things, as you might imagine, they do require some type of eligibility and information about the project. So what I would say at the end of the day is just that you need to just call one of us, and we will walk you through whatever is available. We're happy to send you all this, and I would just say that local initiatives on our website, all of that will be listed there. But if you need explanation on any of that, I think it's really difficult to interface with a lot of these programs if you don't actually have a project, because I can tell you all the things about it, but it really doesn't make sense until you're going through an actual project there. So trying to remember which and where and all of that, we'll send you a proposal, we'll break it down, and we'll look at everything that's available. And I say that also because at the state level and the local level, things can change. And so while most of our programs, like the Enterprise Zone program, has not changed dramatically for years, it's always good to check to make sure that there haven't been changes. Or like I said, with the local redevelopment grant, we never know if we're going to get that money. That's been a very successful program. Everything we do is based on a return on investment back to taxpayers. So we feel really confident about defending any incentive we have here, you know, to council or, you know, to a taxpayer or anybody else. So Virginia Enterprise Zones, they are programs that are run at the state level. They're run at the Department of Housing and Community Development. They are over 50 years old. There have been iterations of them, but the city of Lynchburg actually Zone 2. We have 2 zones, and the zones have numbers on them because it's when they were put into place. So we have the second enterprise zone in the Commonwealth, and we have had that for over 50 years. And then we have zone 46. So we were you know, our second zone was granted as the 46th zone in the Commonwealth. And like I said, they have 2 components: a job creation and a real property improvement. So we have our GIS department is phenomenal. They work alongside me. We are constantly looking to how we might amend the boundaries of the enterprise zone. They're geographically specific. I can only have 7% of the city's total acreage in a zone. I can only have 3 non-contiguous areas of a zone. Therefore, I can't just pick it up and put it down anywhere. So I work in partnership with our GIS department to look at where the zone might be laying, because it's been there for a really long time, that it's over residential areas, railroad tracks, city-owned property. Those are all entities that cannot take advantage of these grants. So we're always working with that, and we have a map that'll let you know if you're in the enterprise zone, and it also can show you, we always go in there and look and put in there, you know, how many businesses received grants, you know, and where those businesses were located. So you can go in there, but you can also go under Parcel Viewer, and you can look at any property, and you can go down in on the side there. And if you check enterprise zone, just like if you checked an opportunity zone, any kind of zone we have in the city, you can go in there and turn on the colors, you know, if you're bored one night, and see what, you know, what zones and what things that you're actually in. If you're thinking about buying a piece of property, or once again, call us. So these are calendar year, and they're done annually. So you would be eligible for the real property improvement grant in the year in which you received a finalized permit or certificate of occupancy. So we pulled all the permits as of 12/31. And if you got a permit that was even close to the $100,000 threshold, then we reached out to you and said, you may be eligible. If you're way over it, we knew you were eligible, but we pulled all those, and we contacted each one of you individually to let you know that. They're cash grants. They're due on April 1st. And I think that this year, and we'll get into it later, but this year it can all be submitted online. I don't know that you have to have a hard copy. It used to be that you had to send a hard copy that had to be postmarked by April 1st by 12 midnight. But I don't know that you have to send a hard copy in this year. But anyway, we'll get to that. It'll be here. So I'm going to go over the real property investment grants. That's what most of you are probably going to be applying for. So it is for rehabilitation, expansion, or new construction projects within the boundaries of the zone. So the very first thing, the biggest eligibility requirement, is going to be that you are physically located in the zone, right? And so it's commercial buildings, office and retail, industrial, and it's mixed use buildings meaning, you know, apartments and commercial space, as long as 30% of the usable floor space is devoted to commercial, office, or industrial use, right? And then they have what they call a facility. And that, I don't think that is not going to be applicable to many of you all, but things like the mall, I actually have the mall in the enterprise zone. I did that because our mall was, back in the day, obviously anybody that's lived here knows that the owners of the mall prior to Liberty, you know, did not give it a facelift, did not make it a lifestyle center, did not do some of those kinds of things. And each one of those anchor stores owned their parcel. So Belk owned their parcel, where Regal Cinema is owned their parcel, Macy's and Sears. So if they had applied for the enterprise zone, they would not have been considered a facility. They could have applied on their own as a separate parcel. So I was trying to do anything I could to help the anchor stores there to refurbish, or even the internal workings of the mall. But we are so incredibly grateful that Liberty is a partner in that now, and you've already seen sweeping changes as to what they're doing, but they too are able to apply for the enterprise zone. So, you know, a qualified zone investor is just any entity or individual capitalizing on the cost. So, you know, you have tenants, you have developers, you have multiple owners, you have property owners. And so the way I'm just breaking that down from a legal standpoint, whoever owns the property is the person that is in charge of how you apply for the enterprise zone. So the owner of the property, and whether that's multiple owners, an LLC, whatever that is, they can take their rights to apply and give those to a tenant. So if they want to work that, so these are all other things, like if you're looking at a piece of property, you know, to purchase or you're leasing a piece of property, and you know, you've talked to our office, you know, you're in an enterprise zone. I have a hard time sometimes. I always invite the realtors, the CPAs, the construction companies, the bankers. I invite all of those people that you all as businesses interact with, so that perhaps, you know, they could reiterate these things and it be a value add. But anyway, that's the deal, is that if you're leasing a piece of property, you're doing the upfits to it. If it's in the enterprise zone, you may want to negotiate with the owner, if you know you're in the enterprise zone, to say, you know, we want to be able to take advantage of this grant because we're the ones doing the upfit here. Okay, so the thresholds for this: number one, you're in the zone. Number two is if you're doing a rehab or an expansion, your threshold is $100,000. You have to spend $100,000 to be eligible, and you can't count that first 100. If you're doing new construction, it's $500,000, and you can't count the 500. And those thresholds must be met each year that you want to apply for the enterprise zone. And that'll be important as we get further down the line. I'll explain that to you. Okay, so we're not going to go over absolutely everything here. I sent most everybody a copy of the how to apply manual and a copy of the application. And that is where, you know, eligible investments, you can see what the list of all those is. So these are examples of what the lists are, and here is a list of what's not eligible. Okay, so your CPA and everybody involved can help out with all of this, but if you become familiar with all this, when you do a project, you're going to be a lot better, you know, able to kind of get a grip, you know, on some of that. So the grant awards are structured. The formula is 20% of the qualified real property improvement that's made in excess of that threshold. But it's over a 5-year period. So remember when I told you in the beginning, this is not an incentive that you hit it one time and it's gone, right? It's also prorated. So there are you know, probably, I don't know, at this particular time, I asked DHCD the last time I had a conversation with them exactly how many zones we have right now, but it's under 50 across the whole Commonwealth. We have, you know, we probably have less than 50 zones. And in any given year, everybody that applies for the real property improvement grant, the General Assembly usually allocates somewhere between, 13 and $15 million to this program. And the real property improvement grants is prorated across the board. So just to give an example, last year, people that applied for the under $5 million, so you are eligible to receive $100,000 for that property over a 5-year period if you invest less than $5 million. So last year, my folks that, you know, were eligible, they were under $5 million in total expenses. They were doing a rehab or an expansion and they spent $100,000. They received somewhere around, you know, based on how much, like if you only spent $200,000, you certainly wouldn't get that. But the sweet spot is probably $500,000 to $600,000 to get the maximum amount. And they got about $83,000, right? So that was the proration. So this year, if they did another project on that building or within the next 5 years, if they spend over $100,000 on a project and it makes sense, you know, from what it cost you from the accountants and all of that, you can go back in and apply for the difference between the 83 and the 100. So once again, we hawk all of the building permits. So if we see that in a 5-year period, and if the accountants are staying on task, they are looking for a way for you to spend a little more money with them too. And they are looking at, you are their customer, they're looking at these things too. But we look at the building permits, we look at what the prorations are. Here's an example of that. But we all try to help if you can apply for additional money, we just try to give you a heads up on being able to do that. I will also say, if in that 5-year period, all of a sudden you do a really big project that goes over the 5 million threshold, you know, you can come back in and say, on this property, I have done that much more, and try to apply for an additional 100,000. So if you've spent in 5 years under 5 million, your cap is 100,000. If in 5 years you've spent if in 5 years you spend over 5 million, your cap is 200,000. Everybody take a big gulp of coffee because this is so riveting. Okay. And so they have, solar, if you're doing any, and we have actually had a company here that did a tremendous solar project a year or so ago. But when you're doing solar only improvements, they lower that threshold, right? So once again, you all don't have to remember all this. If you're doing a project, you just need to call and tell us what that project is. And then we will look at and find out exactly what you might be looking at there. We certainly are not going to know how many people are going to apply, but the rest of it, we can probably tell you. So like I said, here's the continuum here that tells you the sweet spot. So if you're doing under 5 million, $600,000 is what's required to maximize the grant at $100,000. Probably due to proration. Last year was, in my mind, for all the years I've been doing this, it was a pretty good year. I think during my tenure here, we have had 1 year where people got 100%. They got, dollar for dollar. But most of the time it hovers somewhere around like 68 to 70 cents on the dollar. But last year it was, 83 cents on the dollar. And the General Assembly had set a goal of reducing the amount of zones to 30 in 2020. But I believe that as they look at how impactful this program is, and this program is only impactful if it gets in the right department, which I will have to say mine, and we make sure that you know about it, and we make sure that we are constantly looking for how we can take the boundaries and include as many of our commercial and industrial properties as possible, right? So you really have to be out there and telling people, because you all are out there running your business. You don't have time to keep up with all of this. We need to be on the front line for you to show you and help you to walk through all of this. So we're doing everything that we possibly can to make you aware of what you're eligible for. So you have to have a finalized permit or certificate of occupancy for the calendar year, because that goes along with, that is what they use to know that the work that has been done is up to code, and that the expenses, and most people, right, human nature, are going to underestimate their building permit. Why? Because you don't want to pay the city. So you're going to put less money on what your building permit is, I find, than what you actually spent. But you get to count everything you actually spend as long as it falls into the category of being eligible. So we use that building permit as a key piece for the state. There are times when what you are doing does not need a building permit. And in that case, I had one this year, you would have a third party. There's language that addresses that in the manual, but you would go to a third party inspector to inspect that work. And then you can come to the city, and the city building inspector will write a letter telling DHCD, Department of Housing and Community Development, that you did not need a permit. So windows, replacing a lot of windows does not require a building permit. I was shocked, but it does not require a building permit. So we have an applicant this year that replaced a boatload of windows, and they got a third party inspector, and the city will write that, right? So once again, they came to me really early to say, can you help us navigate through this? It doesn't require a building permit, right? So those are some of the things we can help do. We just walked them through, the whole process, and made sure that the building inspector knew what all of this was about. Because sometimes you come at them and yes, they have heard of the enterprise zone, but as far as having that, deep knowledge and how all that works, they don't. And so we would just advocate for you. So, you do have to have a post, it must be postmarked before April 1st. Wow. Okay. So you can submit the form online, but you still have to have a hard copy. I'm going to call somebody on that. Anyway, please, real life example, and real life example of a super professional person where you submitted it all through, you submitted the online part of it, had the hard copy in your hand, somebody wasn't sitting at the front desk, you took it back to your office, April 3rd, you realized you didn't submit it.
Mm-hmm.
No grant. So, has to be submitted. That's why we're doing all this now, Better to get it in early than late. So you submit it online, and then you submit a hard copy following that. And it must be postmarked by April 1st. So the form is, I don't think the application is that daunting, but it is broken up by these things. You know, background information, when you were placed in service is your building permit or your finalized permit. Signature of the local zone administrator. That would be me. I have to sign off saying it is actually in the enterprise zone, but there is a separate, they have also given a separate form for that because of COVID. They've got a separate form that I can fill out and sign and you know, send back to you. What I really need is I need to have a copy of the application. So most of the time, the CPAs are the people that bring all of these applications to me to sign. And usually they line up at my office the week of April, you know, right before April 1st. Like I don't have any other appointments but them. And it's hard, right? I totally get that. But at the end of the day, I think now we can submit some of these things where we don't have to have, you know, I can do the signature and send it back through. But please know that anything that needs to be done, we're going to work with whomever on doing that. But if you have a CPA that you turn it all over to, then they need to contact us, or you can tell us that you've turned it over to them. And, you know, if we get near the critical hour, we will contact them. Right. So there are supplemental forms if you are, if it's a mixed use building, you have to get the city assessor to verify what the percentage is that is commercial space. If you're leasing a space, then you're going to have to get a form that the owner is giving you consent to use that. And there may be multiple tenants. So, you know, there's a form for that. And then if it's a building within a building or a facility, there's a different form that needs to be filled out there. If you have any of these things happen, and what I'm saying here does not, you know, make sense or whatever, most of the time your accountant can walk you through that, or you can call us and we will go to DHCD and find out from them what their best advice is on that. Because this is their presentation. We pull it down directly from them. And then we're happy to advocate on your behalf to ask, you know, any of these questions, right? So this on mixed use buildings, these are going to be things that they're going to require to make sure that the 30% is actual, you know, commercial or usable space. And once again, you can see your CPA signs off on that. Then there's also multiple owners or tenant coordination. These are all things where the owner of the property is king, and you have to navigate all of that in order to send the application in. They've got to sign off letting you know, or you've got to have an agreement with them that they're going to collect it and take it off your rent or give the money back to you after it's over. Okay, so most of these examples on here, what they have, you know, I'm giving you the examples I've experienced here. You're going to want to have a finalized permit. I've not had anybody that didn't have a finalized permit. You know, because the bottom line is if you don't have a finalized permit, you can just apply in the next year. Right? You have to have the finalized permit in the calendar year in which you're applying for the grant. you want to have, you also, if you're doing things in phases, you want to let us know that, or we want to talk to DHCD about it to figure that out. Because what we don't want to have, and what we've tried to get some people to navigate through, is the fact that they are doing phases, and they go, well, but when we get to the end of it, you know, we'll just submit then. Well, that's not how it works. It's going to work based on what that placed in service documentation says, right? So the fact that you did $100,000 worth of work to it or $200,000 over the threshold in a year, didn't apply, but knew you were going to do something in the next year, it goes by what your building permit, you know, says. So you're going to want to look at that as a total project and then figure out how you're going to do it. But it's really about, the way they look at it is, you've got to have gotten over that threshold every year and then apply. So hopefully that makes sense, right? Just, you're not going to be able to go back to them in a year where you may have done, you know, $200,000. You say, but wait, we did all this other work there. If you don't have a building permit that substantiates that goes along with whatever application you're sending, you're going to have a tough time getting them to consider all that. Okay, Alicia, I don't know what the last one said. Can you go back a minute? Was this still errors?
Yeah, this is all errors.
Okay, thank you. I just wanted to look at what the other errors were.
Let me know when you want to. I think you covered pretty much everything.
Yeah. Note to self, page numbers. Anyway, so you need to keep records on this, on your enterprise zone grant for up to 3 years. And DHCD, they monitor grant recipients, and it's done annually at random. So, you know, if most people are not going to have any problem here. I think where some of these things really get iffy is in a mixed use situation. If you're doing apartments and you said the basement was a commercial space and you've got bikes stored down there, if they come to your building, you know, and say, let me see what you had done there, you're going to have an issue. That's not the case with most commercial and industrial and that kind of thing. So they can, if you don't have adequate documentation, they can make you pay the loan back. I've never had, I know about some, but I haven't necessarily had that. So at the end of the day, that when I explain this, and many of you have heard me do it, it is the enterprise zone is geographically specific. You need to be in the zone. You have, if you're doing a rehab or an expansion, your threshold is $100,000. If you're doing a new building, your threshold is $500,000. The property is eligible for the maximum amounts based on the work you've done for a 5-year period. All of the grants are, this entire program is under the jurisdiction of the General Assembly, not me, not council, nobody here. We're just the administrator of the 2 zones that Lynchburg is fortunate enough to have. We can, however, petition, which we did this year, the General Assembly and DHCD to change boundaries. And we are at the point, as you might imagine, where we have done a lot of work on our zones and we don't have acreage left. So we don't have acreage just sitting there that that is not in the zone. And if we do, it is only because we have not found the next commercial space that we could do that with. And like I said, I can only have 3 non-contiguous zones. If I've got to pull the zone across a bunch of residential property, I'm wasting it because residential properties can't take advantage of it. So we can go in and petition where our zone is, and we look at that on an annual basis. And all of our staff is well aware of where the zone boundaries are. And some of the easiest things for us to do are to pull that zone over top of a property that sits right at the edge of any of our zones, right? That's a lot easier to do and takes less acreage to do it. We try to look at all that all the time, but that's where we really can get in there and, you know, have an impact on the zone. But anything we do goes up to the General Assembly and has to be approved at that level. The other piece of this is it's a calendar year program. So if you received a permit in 2020, you have until April 1st of 2021 to submit that application. Once that year has gone by, that's the end of the story. You're going to have to start over with any project that you have, right? After that, you'd have to meet the thresholds and that type of thing. It's prorated across the Commonwealth in the zones. It's 20% of eligible expenses, once again, would be prorated. You have to have a Virginia certified CPA sign off on your real property improvement grant. And other than that, you know, the things that you can count, I always say, if you could take it with you, you can't count it, right? And there's an awful lot of things like, you know, design and architectural and things like that. They're paying for real property improvements. A lot of times they're not going to pay for what it took for you to, you know, do a conceptual drawing of all that and things like that. But, and what happens is that because the General Assembly, this is under their purview, we normally do not get applications and manuals for the program in any given calendar year till late in the fourth quarter. So I'm saying that because if you finished your project in February or March, you can do nothing until they put out the new application and the new manual. And they normally do that at the end of the fourth quarter. So what I will do with many of you is if you're in the enterprise zone and we're having a conversation and you're finished your work, I'm going to send you the last year's, because we haven't had like sweeping changes in this program. So the fundamentals of it kind of stay there. So if you're trying to prepare, if your finance people are trying to prepare, if your HR people looking at the job creation grant, any of that, then you would have an idea of what they're looking for and how they're looking at that. So, you know, hopefully, like I said, it's a lot, but what we are trying as hard as we can to make this as easy, you know, as possible for you. And this year, I will say, I have had more interaction with DHCD, and they have been, you know, we're in a pandemic, everybody's working, teleworking, all of that. But they have been incredibly responsive to me when I've had questions that I needed for them, you know, to clarify what direction they believed, you know, how an application would be looked at and decided. And so you have advocates in us, and we're happy. We don't tell them the company we're talking about. We just give them examples to respond to, right? We just say, what if, or how do I, you know, guide somebody with this? And they are also available to talk to folks. And our accountants here, because we've had an enterprise zone and because we market it the way that we do, I say, you know, some of our accountants here are the best in the state when it comes to knowing the zones, knowing what the regulations are, and walking you through all of that. So I'll just ask, Jessica or Corbin, is there anything that I missed that y'all would bring to a customer's attention? Okay.
The one thing that I would add, Margette, for people that are going to apply for the real estate grants is to make sure that you do have a final certificate of occupancy or a building inspection that has no pending items on it.
Outstanding issues.
Because that's typically one of the things that we really have issue with is the timing of that. And the other thing is, if you have work that has accrued and it's payable as of December 31st, if you pay that invoice within 60 days, we can pull it into the grant year, but they're very specific in the time frame. So if you're close to a threshold, that's something very important to consider.
Oh, that's great. Yeah, so once again, just to let you all know, is that what I would say is that we pull finalized permits, right? And if there are, I don't know that you get a finalized permit if there's any outstanding issues, right? But when we notify you, we are looking at that we could pull the building permit. And if you ask us to send you a copy of it, we could do that. So I'm going to go back and look and make sure, but I'm sure all of you know that you don't have any outstanding issues on there. But I could see where if somebody has a finalized permit that's contingent upon something being completed, DHCD really, lives and breathes by those permits to know that the work has been completed and been completed to code. They do not want to be given grants, state taxpayer money to projects that are not to code or not complete. So, and if you need any of that, Corbin knows how to get us, and all of this stuff is accessible online through the city's Track It, but we're happy to help you with any of that. So do you all have are there any questions?
There aren't any questions in the chat right now, Margette, so we can move on.
All right, job creation grants. I'm going to go over this in a broad kind of a sweeping thing. There are, when you start to talk about employees and how many hours they worked, and maybe they stayed half the year and not, they have formula boxes, Excel spreadsheets set up to help people calculate all of that. So I'm going to give you the high level view of this. And then if you have specific questions about any of it that you need help with, if something is really, perplexing from a definition kind of standpoint, I am happy to go to DHCD, and I'm sure that when you have, and we'll get to it in here, but I think if you have under 100 employees, you don't need a CPA attestation. Is that right, Jessica and Corbin?
Well, that's correct. You have to either have under 100 employees or fewer than 25 full-time equivalent grant positions. And you can qualify for that exemption 1 year and not the next. So that's something that you want to review either with the EDA or your CPA each year.
Right. Okay, so the job creation grant is available to businesses that create high-wage, full-time, permanent positions with health benefits. So there's your caveat, and they consider high-wage. We'll get to that in a bit. But unlike the real property improvement grants, can actually be utilized by nonprofits and different entities. That didn't used to be the case, but now they can. The job creation grant is really limited to businesses, right? No state and local government can take advantage of anything, but it's really limited to businesses or nonprofits that fall under a really specific category. But it's really about trying to award companies that are bringing on new employees. And once again, this is over, once you bring on your 5th employee, so you have a threshold there, you know, you have to create net new, you know, jobs. And when they say net new, they are really looking at net new across the Commonwealth, right? So that's why this can get a little tricky. If you have multiple locations of your business across the Commonwealth, they're looking at net new job creation, right? So when you do and here it is, net new to Virginia, permanent and full-time, when they say high wage, they're talking about 175% of federal minimum wage. That's what they consider, and offered health benefits. And, you know, personal service, food and beverage, and retail are not eligible. Yeah, so they're defining it. Go back, Alicia. Thank you. So jobs of an indefinite duration to a business firm located in an enterprise zone requiring the employee to report to work within the zone on a regular basis, at least once a month. This will be interesting during a pandemic. So I'm sure that they will, you know, make allowances there, but what they're really trying to do, obviously, is it needs to be a real employee that reports to work, that you have records on, and it doesn't have to be the person, the job has to be filled by somebody. And that job, once you are over the threshold, you can count that job and the person that's in that job, whomever that is, for 5 years, right? So the position must be normally scheduled 35 hours a week for at least 48 weeks. And then this is where you get into a minimum of 35 hours a week for a portion of the taxable year in which the employee was hired, or a minimum of 1,680 hours per year if fringe benefits were paid by the business firm. This is why we get our job creation grants are not for the faint of heart. Thank you. Okay, so they actually in the Commonwealth have areas that are distressed, right? Areas that are really distressed. And they dictate where those areas are. They have high unemployment, and what they do is the job creation grant, you can see here the wage, you know, the wage threshold in those high unemployment areas that the state has designated. The wage threshold is 1088 in lieu of 1269 or 1450. So you got to earn 175% of minimum wage or 150. Here's the areas that are high unemployment areas. We are not one of them. Thank you very much. And so I'm sure they're trying to make a point in the last slide that they, you know, that areas are or not high unemployment areas. And so if you were high unemployment last year, you might not, that locality might not be it again, right? So these are no longer considered high unemployment, but they are telling you that if you've previously applied, that you can continue to qualify at that 150%. It's not applicable to any of us. I'm hoping we're not in that list, not something that I want to be included in. So it's calendar year. And what you have is you're going to set a base year. So you want that base year to be when you had the fewest number of employees. And so what they will allow you to do, so if you're applying in 2020, you can either use 2020 as your year, or you can do a look back year of 1 year beyond, right? Like you could go to 2019. And what you will get as a grant is you would get $500 a year per employee, starting with that 5th hire net new to Virginia. You get $500 for that employee for the next 5 years, because that's 175% of the federal minimum wage. If you pay your employees more than that, if you pay them 200% of minimum wage, you get $800 a year. And minimum wages in the state of Virginia are going up anyway, so, but they do have it set at $7.25 for this presentation. So this is just giving you an example. You know, base year, let's say it's 2017, you have 10 permanent full-time employees. The grant year, you've hired 10 people, right? So they all make 175% of minimum wage, and they work the full year. They all have health insurance. So you've got 10 base year employees. You've got a threshold of 4. So you're going to have 6 eligible permanent full-time employees. Because it's 175% of federal minimum wage, it's a $500 per employee grant. So you would get $3,000 for those employees. So you can apply for 5 years once you're over that threshold. So the main thing is that all of these, just like we talked to you in the beginning, the enterprise zone is just another level of incentives or grants that are out there. And, you know, what we do a lot of times is these are just layers of things that you could take advantage of or not take advantage of. And I would just say that, you know, unless I was an absolute, you know, whiz or a CPA myself, I might have whoever your company's CPA is. First of all, you want them to have had some experience with the enterprise zone, right? So sometimes we even have firms that have an accountant, but they've never done an enterprise zone, and they will go and say, I don't know anything about this, but Brown Edwards or Davidson, Doyle and Hilton does. I'm going to bring them in to help me walk through this. I mean, I'm not saying that you can't make your way through that, but it is something that you don't want to leave money laying on the table unless that's really your choice. Just because I think the job creation part of it can seem a little daunting, but if you know you're in it, you figure it out on the front end, then you can keep up with it over the next 5 years that you're going to have this, the new employment. And the truth is that in the same way that you might hire, let's just say you hire 25 employees, you've got a baseline of 100, you hire 25 new employees, that means you're going to count 21 of them towards this grant. That 21, if you all of a sudden got a new line or got a new customer or got whatever, if you get a boatload more employees, you can count all those employees too. Or if you drop below the 21, you're going to apply for what you're eligible, you know, for based on what your real numbers are. Does that make sense? Meaning nobody's holding you to anything. You'll just apply, and you can have a year where you don't apply. If you don't have the employees, if they weren't on there, then that you don't apply, but you're going to go with the number that you have that is eligible at the end of each year. during that 5-year period. So if you have a lot more than what you originally, your thought process was, or what you did in the first year, you can add those on as well. I think the cap on it is something like 300 and some employees. Is that right, Corbin? Yeah, 350. Okay, so it's the awards are going to be based on, oh boy. One more, Alicia, I think. Oops. They're going to,
Sorry.
just at the bottom line, they're going to make sure that that the person worked the number of hours that is what is eligible there. So when that's going to be the determining factor, and that's the level of complexity, is just being able to show in. Now you can go, Alicia. Okay, stay right here. All right, this is the form. That's the worksheet. And it just is, it's going to automatically calculate. So you just want to be familiar with that form when you're going to try and if you hired folks in this year and you've just gotten the form, or you got the form from me, you're looking at that and you answer the questions and it self-calculates. If you're having any issues with that, please let me know, and we will have DHCD, help us to navigate this. But it is supposed to be that if you fill in the information, when did they first come to work? When did they last work? In that, does that say date in there? It's really hard for me to see.
Yeah, it says last work date and base year.
Right. So what they're doing there is just making sure that all the people that you're claiming in your base year, have worked that full year, or worked those requirements, and then you're going to put in your new employees.
Right. Well, you put in your base year, and then you put in the grant year that you're applying for.
Right.
And then it looks like it automatically calculates those months worked.
Yes.
So that's the thing. The spreadsheet will automatically calculate a lot of this once you put in those dates.
So it, like I said, it may be tedious to load it in the first time, but it really is. It's just establishing that base year, right? And you've got employee names on there, right? So you might, it's just going to be based on who you have there. You might have different people, as long as your positions add up to the number of people that you are actually applying for in that year, which would be 5 jobs over what your base year was. With the ability to prove that those people, how much those people have worked in that given year. Does any of you all that are on the call going to apply for the job creation grant? And if you did, did you receive the manuals that I've sent out ahead of time? I sent everybody as soon as it became available, and I knew anything about a project you were doing, I tried to send this out. So I don't want to, explain things that I might not get exactly right. If you're not having an issue with it, and if you are having an issue with it, then, we will certainly get DHCD to intervene and help with any of that. Because I don't want you to become discouraged and not apply because something just isn't quite making sense in how you do this. Because really, I am here to give this overview, which is really just about like the basics that go on with being able to apply. So if you get down in it, and once again, like I said, it is like Corbin said, you don't need a CPA attestation for the JCG if you've got under 100 employees, or as Corbin says, 25 that you're going to apply for over the baseline, right? So once you get over that amount, but I can't imagine that any of you don't either have a CPA on staff or aren't doing something where you're really looking at this. So once again, happy to answer any questions, but I don't want to mire myself up into something that I haven't filled this out. I'm not an HR person that looks at, at all of that. So they've tried to make the worksheets where they do calculate on their own, that if you just follow what the columns say there, and that's where I'd say if you had a definition issue of what they really meant there, that would be covered in the manual. So I don't know, Corbin and Jessica, how many JCGs you all have filled out and what you might see as being things that are that people do that that these folks on the call could be looking out for.
I think for us, the two main questions that we've had this year is if that you have an employee that would typically report to the office or report to work, even if they've been working remotely due to the CDC guidelines, you can still count them as enterprise zone employees. Rebecca Rowe addressed that specifically in her How to Apply webinar and their site. So that's been a big question. And the other question is, okay, we had to cut back this year. Is it worth doing the grant? And you just have to remember that it's a year over base and not year over year. So especially if you're a new business and your base year was 0 or a low amount, even if you've cut back from the prior grant year, it still is probably worth looking at for the current year. So those are the two things that we're hearing a lot in our office.
And do you, Corbin or Jessica, do you have, what are customers' feedback to you all from filling out the forms?
I think typically the first year causes a little bit of anxiety, but really it's just a matter of determining what fields you need. We get them to export the information out of their payroll software. It's very easy to fill in from that point. The other thing is that it is worth it a lot of times to go ahead and do it, even if you don't require the attestation, because even if you only have 10 people that are eligible for the grant, even at the minimum amount, that's $5,000. It's $25,000 over the course of the grant application process. And so you don't want to leave money on the table. And they do fund those 100% every year prior to, doing the prorations for the real estate grant. So I think it's worth the little bit of headache that it causes.
Right. And I would just say that we don't get very many job creation grants, even from our larger, businesses here that are adding. So, I'm very interested in why they don't take advantage of it, because like Corbin, if you know about it ahead of time, and, if it's the complexity of it, then I would love to have the feedback so that we can share that with, with DHCD, because it is money that is left on the table, and it is funded at 100%. So if you're going into a year with JCG, it's not going to be prorated. It takes precedence over the real estate and all of that. They fund all of the job creation grants first. So all I would say again is just, we are here. We are very accessible. We might not be able to answer the question for you, but if you have an opportunity, if you've hired folks and you can apply for this, we will help you, you know, walk through that and put you in touch with somebody, right? Just want to throw that out there from the standpoint, because to me, it's pretty simple, other than the fact that you're loading people in there. And if you're talking about people in payroll, you may have people that came in and out and all of that. But at the end of the day, what constitutes, you know, a full-time employee based on what the manual says, and, you know, what's your baseline and what do you end up with there? So if there's anything we can do, that maybe, you know, that you're going to hire, or something's going to go on, let's talk about it now and figure that out. Because I think the things that you learn the most are when you have an actual example, which is why I've asked, you know, Corbin or Jessica about examples that they might actually have with customers coming in, because we get a copy of the application. We don't necessarily, we don't know why those that we don't see an application from didn't apply, or we always tell them about it if we know that they're doing a project, but we don't necessarily always see an application follow that. We see applications come when it comes to other types of incentives for the job creation, but not necessarily, you know, always on this side. So just want to put it out there. We don't know everything, but we're happy to find out for you. And like I said, DHCD is really open to helping people navigate the process. Okay. So agreed upon procedures for JCG. And this is about CPA agreed upon procedures. So this is how, you know, your CPA that you bring on board, when you have to bring one on board, and you know, what are their qualifications. The way I like to explain this is that the Department of Housing and Community Development administers this program. They're not experts in construction. They're not experts in accounting. They're not experts in HR. They're not experts in all of that. But what do they have to fall back on? On the real property improvement grant, they have that a CPA, a Virginia certified CPA, is putting their reputation on the line to sign off on your app, that everything you've done is to the is based on what they've asked for. The building permit, our building officials are giving them a finalized permit or certificate of occupancy stating that you did what you said you were going to do. Those two things are what every application that comes through there allows them to feel, you know, comfortable with, because they got two places to come back to, really three: you, but also the CPA that signed off on the work, I mean, on the expenses and the information that you put in there, and the building official when it comes to, you know, what those things were there. It's probably more the CPA, because the building permit's just going to state what you told us. The CPA signing off on all those expenses that you're submitting. So these are the procedures that the CPA has to follow on both the real property improvement grant and the JCG. So I would say, when you're looking at this, the thing you need to keep in mind is, whatever the bill is that they charge you for doing all this, these are all the things that they have to do in order to sign off on your app. So it's not just they look at it in a swipe of a pen. They actually have to spend time going down through all of it. So here's where it says, if you have less than 100 employees, go back one, less than 100 employees, and firms with more than 100 employees. So the other thing that they will do at at DHCD is that you submit your application by April the 1st. They review all of these applications. If they find mistakes in the applications, or they find things that are not, that they need further explanation on, they will give you the opportunity to correct it. So, and if you can do that, then you rock on, but you just have an added benefit there that they're going to look at all of them, and unless it's egregious, right? Like it's just, then they're going to give you the opportunity to fix that. And once again, if you have any types of issues where you don't own the property, or where you're the tenant, or it's a mixed use building, you're just going to have some added forms that have to go on there, because the property owner is king and residential is not eligible to apply for this program. Whether, the building itself could, if it is 30% commercial, and the city assessor actually can go in and make a determination on what percentage of the building is commercial. And I would just say that is part of the reason, among many others, for you to discuss your project with one of us on the front end, because the city assessor could go at the very beginning and look at what the space is that you have available there that they can document as being commercial. And there may be things that you could do that are really simple, that would allow you to be able to apply, right? So the earlier that you talk about any of this, the more prepared you're going to be able to be, and the more that we can assist you if we know anything, about the project. So once again, this is just going over this. The CPA has to go through everything that you've done with the fine-tooth comb, because they're putting their name on that application and attesting to that the information is correct and in accordance with what they know to be these procedures. So if you can't sleep at night, you can come back in here and read all of this. And they really are, one of the big things is, like I said, heartbreaking to think that you submitted your form online and then the hard copy of it needed to be mailed and postmarked, and somebody didn't get it in. It was clear through the online thing that you did all of that, but this is the state of Virginia, and they have to go by the letter of, treating everybody fairly and making sure that's in. So you just want to make sure that you have, double, triple reminders in place to make sure that you submitted the grant online. That's usually never any problem, but that actual physical copy is postmarked ahead of time. And some of the things that I've seen, and everything's just, experiences of what people have done, but I'm seeing the applications come in earlier. It used to be the last week right before April 1st. That I literally, I'm not making it up. I would get a call from the accountants. When are you going to be in your office? When is this happening? When is that? Some people actually wandered up here just thinking that I would be sitting there waiting for them. And that was incorrect. But I have, I am very, try to be very helpful. I actually stop in CPA's offices and sign these if I'm going to be anywhere in the area, and I know they have one. But one of the things that I really insist on is that we need a copy of all of the applications that come through, just from the standpoint of, how we can keep records in terms of mounting a defense. You come up for enterprise zone certification, once every 10 to 20 years. And I have had that in 2015, zone 46. And I just had an overwhelming response from the business community that had taken advantage of this. And the other thing is we're looked at all over the state as doing a really great job of promoting our enterprise zone. And I think it's because we take such a personal interest in making sure that people know that they're eligible for it. This program has been in existence for so long. And as you might imagine, the fact that it's under housing and community development and not under economic development, it was used as a tool, for revitalizing, older areas of cities and counties. It was used for a lot of different things that in today's world with a $100,000 threshold on there, I mean, if you're a small town that only has one main, just has a main street, you might not have a building on your whole main street that would necessarily be, eligible. I mean, it wouldn't have a whole lot of money over the 100,000. So the General Assembly has taken a real hard look at the enterprise zones and has talked about, how are they really making a difference? Well, I've literally thrown myself on the railroad tracks to them to say, I don't know what you did in the other cities and in the other counties that you put an enterprise zone down, but if somebody's not actively managing it and you do not have, density of any kind, or you don't have commercial, industrial buildings, the enterprise zone has been an unbelievable tool for the city of Lynchburg and my businesses here. So we usually average grants coming back to our folks here of somewhere around $1 million a year. And so, if they need a poster child for how this works, it's all of you all, and it's what Lynchburg has done. I think we are a sweet spot for this type of program. Especially when it comes to rehabbing buildings or even putting up new buildings, right? We've made sure that if we can possibly do it, if a large construction is going on somewhere and, we don't have a lot of vacant land left, we make sure that we try to get that parcel, put in the enterprise zone. So Alicia had a slide up there just now that I think I already told you. It is prorated and we have no idea how it's going to come. But I think what I told you is correct, that last year was at 84%. That was a banner year. It normally hovers around 68, but in 18, it was 74%. I have to believe some of that is because they are taking a hard look at all of the enterprise zones to see how they're performing. So my enterprise zone, because of the work that we do, I believe, and because of the work that each one of you are doing in your respective business, performs very well, meaning our people take advantage of this, of these grants. So what happens is you submit it in, you have to submit a W-9. We say that with every other word here. Melissa's on the call, and W-9. If you don't even get across the door here if you don't have a W-9. But I confirmed that you're in the zone, but you apply, everything's finished on April 1st. They review all the documents, and most of the time you will have a check at the end of June or the beginning of July. So it moves, it moves pretty quickly. So you just want to make sure you check everything, you've signed it, you've gotten your CPA to sign it, you have done all of the things. This is what the actual system looks like, where you go into DHCD. If I'm you, I'm wanting to do certified mail return receipt by April 1st. Please do it before that. I'm sure they have people up there, bedraggled people standing there at the door knocking at DHCD, driving it up there. Print and keep a copy just for those records. We will print and we will ask for your CPA, or if you send it to me, and you know, I would say something else to you all is that some of you use accounting firms or different folks that are located somewhere else. Like, I don't know them, and that's awesome. But we all know about spam. We all know about emails that come through that you don't know. I know you. So if you're submitting your app or somebody's doing something with your app, you can give me a heads up. I'll make sure I'm looking for it, or I'll go track the person down, or I'll do whatever. I don't want there to be, you know, any, you know, snafus in terms of making sure that you get what you need from me in order to get that application done. So I think with that, April 1st is your deadline, and you remember that from the standpoint of, I think that hard copy that has to be in there by April 1st is the biggest sticking point. So, any questions? Once again, you get in there, you have any questions whatsoever, we are happy to call Joy or Kate. They're both incredible. We're happy to send you links, like Corbin said. You know, she's set in on when DHCD does the web. They do a webinar every year, and they try to do it around the state. But everything's been virtual, and so we do one on our own. Because number one, we want to make sure that everybody, that we are contacting everybody that had a finalized permit, and people that had a finalized permit that had already submitted. We want to make sure that they knew they could apply for the difference. And we just want to make sure that with all of this, this is, like I said, the actual presentation from DHCD. So you're not missing anything. And if I didn't explain something properly, I have not filled out a job creation grant. So if I did not articulate that well enough, and how that form works, I'm happy to help you with any of that. I just don't want you, like Corbin said, not to apply if because you find that form daunting. Because I think any of us can, work up the numbers there and just say, okay, you're going to get $5,000 off of this, or $25,000 before the time's up. You have to decide as a business, is that worth it to do this work? And I would say after the first year, you ought to be, it ought to become a lot easier. So, any questions? Any questions about anything in our office? Okay. You don't have anything in the chat, right?
There is nothing else in the chat. Corbin, thank you for answering that question that was asked, that Mike asked, about when invoices could be paid on the real property improvement grant. But other than that, I think there aren't any other questions.
Okay, we're the Office of Economic Development and Tourism. And so we have two websites. We've got them both here. If you haven't seen a copy of our annual report, I'm really proud of it. I'm really proud of the team pulling that together, especially during the pandemic. That annual report is a reflection of all the good work that our businesses here do and how we might support them. We think that we have tools that we hope are valuable to you all, but the main thing that we want you to know is really all about personal relationships. They're virtual right now, but they're still personal. And, we can't thank you enough for doing business in the city of Lynchburg. And we want to do whatever we can, to help that, and to also have you, be one of our biggest advocates for moving a business to the city, keeping a business in the city, attracting great talent, having wonderful amenities in the city now and in the future. So I just want to thank you all again for everything you do every day. Thanks to my team. Thanks to all the CPAs who are absolutely fantastic and working side by side to try to make sure that our companies take advantage. They're some of your biggest advocates as well when it comes to these programs. So thanks so much. Like I said, if you haven't seen our annual report, please download it or at least watch the video. Like I say, I get verklempt every time I look at it because I think it's one hell of a reflection of this city and our resiliency. So have a great day. Thanks so much for joining us, and know that we're only a phone call, email, or text away. Thanks.
Thanks, everybody.
Everyone.